Hello and welcome to Startup Street. I'm Arundhati Ramanan. These are the top headlines from the startup world. Delhi High Court grants stay on angel tax demand of 1,400 crore rupees against OYO for assessment year 2020 to 2021. The court directs the stay order to prevail till the Commissioner of Appeals of the Income Tax Department doesn't pass an order on the same. Bitcoin at an new all-time high of $118,000. This on the back of strong institutional demand and inflows into crypto ETFs. The surge triggers the liquidation of over $1 billion of short contracts. Travel booking platform EaseMyTrip co-founder announces the launch of an AI venture studio aimed at supporting the country's technology entrepreneurs. It will represent a shift from traditional investment models toward collaborative partnerships. Omnichannel eyewear retailer Lenskart is likely to issue additional shares to its founder and CEO Piyush Bansal through a structured payout arrangement. This could increase Bansal's stake in the public markets-bound company by 1.5% to 2%, as per a report by ET. Bansal, along with his sister Neha, who is also a co-founder, hold about 12 to 13% stake in the firm. An Indian venture philanthropy platform, ACT, announces 1.43 crore rupees in grant capital to 5 idea state solutions as a part of a pilot. With this move, it aims to bridge the early stage funding gap faced by social innovators in India. Those were the headlines that we're tracking for you this evening. But on the hot seat today, paying insurance premiums just got a lot easier. Bima Pay Finsure has launched a financing solution for corporate insurance policies, allowing businesses to pay premiums in easy EMIs instead of upfront lump sums. From group medical to fire and accident cover, the solution targets MSMEs and large companies alike, aiming to finance over 20 crore rupees worth of premiums by FY26. This could be a game changer for business cash flows and insurance penetration. So how will this exactly work? Let's find out. Joining me now to discuss this further is Hanut Mehta, the co-founder and CEO of Bima Pay Finsure. Hanut, thank you so much for taking time out and being here with us on Startup Street. You know, you are a digital lending platform and you've now decided to enter the corporate insurance space. If you could take us through how big of an opportunity this is and why you've decided to take this route.
Hi, thanks for having me here. And thank you for that introduction. We at Bima Pay have been into premium financing since the last 3 years. Broadly, till now, we were focusing on the retail segment where we were financing health insurance policies. We were guiding new and renewal policyholders to buy or renew their policies over a EMI plan, wherein they did not have to pay their entire premium upfront. Rather, the flexibility of payment was being provided to them. However, what we recently gathered with the market feedback was that there's another huge gap in the corporate insurance space, which also needs to be filled. Like we were doing it for the retail audience, we're now going to be starting this for the corporate audience. Any small or medium enterprise who does not have easy access to credit, but has to have an insurance policy, could be for its employees, could be for its assets or its building or any other kind of a facility. They'd had to chunk out a huge premium upfront for that cover to get live. However, now Bima Pay is going to be offering them a solution where they could split their payments throughout the policy period, putting less burden on them. So this market, we look at this market entirely at about a 60,000 crore market annual premiums of health insurance altogether, with a good chunk going to the corporates as well.
Yeah, so a big opportunity that you're seeing over here, but most businesses are used to paying premiums upfront, right? As you just mentioned. So what's driving this demand for EMI-based insurance payments in the corporate segment?
The larger corporates are obviously cash heavy and have good access from bank ODs and various other sources, right? But what about the smaller enterprises, which are newer businesses, smaller and medium enterprises, where they don't have easy access to credit? But insurance has to be taken any which ways, right? So the kind of credit these guys have is extremely expensive. And here we kind of bridge that gap. We're going to be providing them cheaper solutions to credit where, and they don't have to go out and look for it anywhere else. It's going to be a part of their policy buying journey. Yeah.
All right. And, you know, you are targeting over 20 crore rupees in finance premiums by FY26, right? So if you could sort of tell us what's the scale of the pilot so far and what kind of traction are you seeing across sectors like healthcare, IT and logistics?
It's a very small pilot, to be honest. If you look at the entire market size, this is not even not even less. It's less than 1% of the entire chunk. We've kind of focusing on getting this through a few insurance companies and a few industries. Once we are able to do this 20-25 crore pilot, then is when we look to scale in the next financial year. We've already would have done around 40 to 45 insurance policies in this space, and we're looking to do a lot more in this particular pilot. And this is
Sure.
across
And,
industries.
so you're looking to do a lot more in this pilot, but this model uses the policy itself as the only collateral, right? So how are you managing credit risk, and what role do insurance companies and NBFC partners play in the ecosystem?
So we basically we found a way where we can take an assignment of these insurance policies, where the policies itself will act as a collateral for our lenders. And through that model, we are kind of been able to provide a kind of a credit approval to customers who otherwise would never get a loan. Right, that's the mechanism that we've arranged with our insurance partners, and that's what will provide security to our lenders to manage the credit risk.
Sure, and let's talk about the lending business, the core part of your business, and how it's done so far. Where are your revenues, NPAs, and what's the loan book looking like?
Yeah, so as I told you previously, we've been focusing mostly on the retail segment. We would have done more than 500 crores worth of lending, particularly in the previous financial year. We did fairly well in terms of numbers. We had financed more than 80,000 policies. Whereas our top line went at around 7 crore rupees for the previous financial year. We were profitable. We maintained a decent margin of about 30-35%. And we see this just as a very small beginning, because the corporate segment is a much larger segment that we've just started to tap in. These numbers are going to be much more in the coming years.
Sure. And looking ahead, will you expand into retail insurance premium financing, or stay focused on institutional and corporate policy? What's the broader roadmap for Bima Pay Insure?
Retail is always going to be priority one for us. We've been doing retail aggressively, and we kind of target about 70 to 75% of our book to always be retail. We're coming up with fairly new products in retail segment as well, related to the other segments of insurance other than health. But yes, always focus is going to be first on retail. However, 30% of the book is what we imagine for the corporate premium financing.
All right, Hanut, thank you so much for taking time out and being here with us on Startup Street. We wish you all the best on this journey going forward.
Thank you so much. Thank you for having me.
And moving on, specialty coffee chain Third Wave Coffee has forayed into a new segment beyond just coffee, launching a range of bubble teas amid rising demand for such beverages, especially among Gen Z. In a conversation with Shilpa Rani Peta, the co-founder Anirudh Sharma also spoke about the company's target to turn profitable this fiscal and clocking a growth of 35 to 40%. Take a look.
Currently, we are 165 operational stores across 12 cities. We closed the last financial year with 150 stores. So we opened 50 odd stores so far. We want to have a quality growth path, be able to be profitable, and close this fiscal year with around 220 to 240 stores this year.
Right. So let's talk a little bit about the launch today. From being a proper coffee shop, today you're foraying into, boba, and you're also expanding your matcha range also. What's the idea behind the launch of Bobbles, and what was the consumer insight behind that?
So we've always been and will always be a coffee-first brand. Having said that, we have always wanted to make sure that our relevance to consumers, different genre of consumers, and relevant across day parts was very, very important. And that's one of the reasons why we adapted to the matcha culture very, very early on and launched matcha back in 2019. When we saw the trend picking up, the millennials, Gen Z adapting towards and indulging towards the bubble teas, we wanted to make sure that that is also part of our offerings, because those are also our customers who have coffee as a functional beverage. we've seen the beverage consumption increasing, and we wanted to make sure that these offerings are there on our own menu as well.
Can you talk about the target that you have? What are we going to see? Are we going to see you entering new cities, especially, I think, which would be tier 2, 3 markets, or are you mainly or largely focusing on further populating the metros that you're already there in?
I think this year we also entered Chennai as a new market. We entered Mysore as a new market. Mangalore, Trivandrum as a new market. So we've also entered a lot of new markets, but the focus would be to go deeper into these markets, open a lot of neighborhoods. I think there's a lot of potential for us to open up in existing markets. We are only 25, 26 odd stores in Bombay itself. As a brand, we do feel that these markets can easily take 100, 150 stores, without any stress.
And you closed in at about 241 crores in revenue for FY24. What is FY25? How did FY25 look like for you? And what are are you confident of maintaining this healthy high double-digit growth going forward as well, especially given you have such a strong expansion plan in place?
See, we are very careful when it comes to store locations, the way we sign our stores, the ramp up that happens, and for us, we want to make sure that we have a 35 to 40% growth year on year.
Okay.
Making sure that the growth which is there, the profitability remains consistent across year, and we don't see any shift happening over there. So that's what the focus is on, where we have that P&L rigor, we have the profitability rigor, and we have a revenue growth of 35 to 40%.
How many of your stores are currently EBITDA positive or profitable at this point?
We actually have close to around 90% plus stores which are EBITDA positive.
Right. And I mean, how far do you see a company level operational profitability for you?
See, our focus and our aspiration is to become profitable this financial year.
Okay.
And that's what we'll eventually target for.
Okay.
This year, as I mentioned, we want to make sure that we have a 35-40% incremental from last year.
Right. So you've already hit about 300 crores in revenue. Yeah. You've crossed that?
We have not crossed that.
Okay, okay. How do you view the competitive intensity right now, and what are the levers that you're playing? Is it purely on innovation? Is pricing an important lever that you can play when it comes to competition?
So it's a balance. We look at the way we are expanding, the stores that we open up, where we open up. Pricing is a very important part of it. How do we make sure that we are a lot more accessible to consumers? We were the first one to launch our own loyalty app, where we had subscriptions, we had app, people could order through it, get a cashback, which also made the pricing and the cost very affordable, very accessible to consumers. And that was the whole idea, that how do you make sure that a consumer visits and comes to you every single day? Because despite any other format, coffee shops are one place where people want to come every day. It's an everyday brand, everyday place, right? One of the other very strong verticals and levers that we have is the innovation. That is one thing that keeps us fresh, keeps us new, keeps us relevant. Because the frequency of visits is so high, the fatigue hits in hard. And that's why consumers look at new things, look at new products, look at freshness. You can always go back to your classic and your everyday beverage, but having that really helps us get newer customers and something new to offer to consumers as well.
On that note, it is time for us to head into a short break. But coming up next, Amazon recently wrapped up the 4th season of its Propel Accelerator program aimed at turbocharging India's direct-to-consumer brands for global success. That and more when we come back. Stay tuned. Welcome back. You're still with us on Startup Street. Amazon recently wrapped up the 4th season of its Propel Accelerator program aimed at turbocharging India's direct-to-consumer brands for global success. From nearly 900 applicants, just 3 winners have emerged, each bringing unique innovations in personal care and beauty to the global marketplace. Aishwarya Anand caught up with Srinidhi Kalvapudi, head of Amazon Global Selling India, to understand more about this year's top startups, their growth potential, and what's next for the program. Take a look.
You've just concluded the 4th season of Amazon Propel Accelerator program. So I want to understand who are the top winners and what kind of innovations are they bringing to the fore?
We started with around 900 applications, for this particular program, out of which we shortlisted around 54, out of which we picked 3 winners. We have Fix My Curls, which is in the, the hair care, space. We have Auric, who's in the health and, personal care space, and Isaac, which is in the perfume space. But if there's one thing that I would pick up about all of these 3, I think it would be that, it's apart from the execution ability, of course, it is that, the right selection at the right pricing and the right targeting.
So when we talk about global expansion, it is often very capital intensive, right? So how significant are the equity-free grants in enabling very meaningful scale up for these winners? What is the kind of financial help that you provide them with?
So we give a grant, 100,000, but this is an equity-free grant. This is not this is not an equity grant, right? Part of this ecosystem, if you see, we have our venture capitalist partners as well, right? So the entire idea is to bring these different players of the ecosystem together so that they interact with each other, and the VCs also figure out where to invest. The brands also get the right kind of mentoring. There is industry experts, there is of course Amazon experts, guiding them, and so on and so on.
I also want to now understand that you've already opened season 5 of Propel now.
Yes.
So what are going to be the new elements and differentiators from all the other seasons that we've seen till now?
Yeah, I think the biggest differentiator is going to be that, this perhaps is going to be the biggest season so far. We are looking at having about 100 up to 100 participants in season 5, right?
Okay.
So as I said, we had around 54 out of 900 applications, right? The year before that, we had 30. The first 2 years, we had around 10 or 12, right? And this year, we're looking to have up to 100, right?
Up to 100.
Up to 100 in season 5. And, this should be a testimony to our growing confidence in the D2C space, right? And, particularly how our D2C brands can actually make a big name for themselves globally, right? Okay. And, we are seeing a lot of these brands, right? I mean, you have Minimalist that has emerged out of Propel.
100%.
We have Sirona that has emerged out of Propel, right? So we have a lot of these, great names, right? While not out of Propel, we also have a lot of D2C brands like Vadam Tea, for example.
Absolutely,
right?
absolutely.
Skillmatics.
Yeah.
All of them e-commerce export-first brands.
Just shifting the focus to now Amazon Global Selling, it has helped Indian exporters clock $13 billion in cumulative exports. So how do you see this number grow in the next 5 years, and especially in the context of government's export targets?
In our last summer announcement, we said that by 2030, we're actually going to hit $80 billion in cumulative exports, right? In the foreign trade policy, e-commerce exports was actually included as a separate category. It was the first time ever that it happened. Sort of testimony to how the government is looking at e-commerce exports, and that as a driver, to this entire export space. So yeah, we are pretty confident. I think we have already 1.5 lakh exporters, with us. We've already delivered this $13 billion, right? And we're pretty confident that we are going to hit that $80 billion.
$80 billion. Talking on that front, I want to understand that what kind of Indian-made products are you seeing the most traction on in the global markets? And are there any surprising or interesting categories that you've seen that have come up?
The cotton-based home textiles, that continues to do well. The D2C space, that continues to do well, right? Shilajit, that has picked up a huge traction in the US in the last couple of years, right? And a traditional Indian-based stuff like Multani Mitti, for example, right? That sees essentially a lot of traction, right? So broadly, if I were to summarize it for you, I would say that it's a combination of traditional Indian strengths combined with, what our D2C brands are innovating on, primarily in the health and personal care and beauty spaces. So this would straddles the entire spectrum, broadly speaking.
It is time to take a look at all of the deals that happened in the startup space this week. 13 startups raised over $66 million, according to Venture Intelligence, taking the total deal value to $4.45 billion for the year till date. NBFC Credit Wise Capital secured $23 million from Trident Growth Partners and others, while healthy food firm Ketika lands an investment worth $18 million with participation from Anicut Capital, Incofin, Narottam Seksaria Office and others. That's not all. NBFC In Prime FinServe secures $6 million from investors like InfoEdge, Kettle, Burrow VC, Pravega Ventures and others. Meanwhile, NRI-focused fintech company Belong and digital content startup Chai Biscuit added $5 million each to their kitty. With that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.